So thanks, Tim and Red Cloud, for having us here. My name is Chris Chang, and I run the corporate development efforts at Canada Nickel. Just to kick it off, ticker symbol CNC, and kind of like what Ross Beatty said at the luncheon, we're looking for sizability and scale, and we have exactly that here at Crawford. So just a quick high-level overview. We're pretty bullish on nickel space and nickel fundamentals. Typically, what happens we had a pretty good bull run in the early 2000s, which followed by undercapitalization of the sector, and that kind of left a pretty big supply gap or supply gap for new projects to be advanced. And we expect a super cycle to kind of emerge in the middle of the 2025 timeline, with the EV sector also transitioning to a kind of a clean battery-powered metal now. A couple things that we've done over at Crawford. We've recently closed a investment from Anglo American that invested about 9.9% in Canada Nickel now. Last year, in 2021, we announced our PEA that had a NPV about $1.2 billion and after-tax IRR about 16%. We are looking to announce our feasibility study in the middle of the year. We're going to see a lot of improvements, but namely, we decided to push back the feasibility because there's significant improvements that we made along the IPT carbonization process, which we believe could be a significant part of the story, and also could be eligible for significant federal grants going forward. We've also doubled the resource over the course of the year to about 1.2 billion tons, 3 million tons of M&I in the ground. It's about a top 5 nickel sulfide project in terms of contained metal in the ground. We've kicked off our permitting process. We expect to get our permits received by the end of 2025 and be in production by 2027. And Crawford's just one of our properties. There's actually a whole district of assets in the area. We've actually identified at least 6 more Crawford-like deposits that we believe could be in a district-scale operation. So just a bit of background on the team. Mark Selby is our CEO. I'm sure a lot of people have seen Mark. He was part of Inco when he tried to merge the company with Falconbridge in the early 2000s. When Inco got acquired, he then went to Quadra FNX, and then when Quadra FNX got acquired, he then went to Royal Nickel and took that asset from basically a exploration phase company to be fully permitted. So when he joined and formed Canada Nickel 3 years ago, he essentially took the same team that fully permitted Dumont to Canada Nickel. So this team here has experience in not only de-risking assets, but taking it to a shovel-ready decision. So just a quick overview of our capital structure. We did close on $44 million this morning, and that's a $24 million investment from Anglo American, as well as a financing of $20 million. We used some of the proceeds to pay back a facility that we borrowed from Ormet of $14 million. That leaves us with $30 million of cash after all of that. So we are fully funded for the rest of the year. So just quickly on the nickel supply and demand, as I kind of highlighted earlier, that we are seeing a nickel supercycle kind of emerging in the 2025 period, driven largely from underinvestment and the transition of battery metals, and continued growth in the stainless steel sector. We estimate that demand by 2030 will at least be about 5.1 million tons. Last year, or 2021, demand was around 2.8 million tons. So you're getting close to double in terms of nickel production that we will be required to fill the demand. And where is this nickel coming from? If you look on the right side of this chart, it's typically laterite material that fills this gap. And if you look at the carbon emissions profile of the nickel laterites, they range anywhere between 34 tons of CO2 to 88 tons of CO2 per ton of nickel produced. That's materially higher than what you see on the left side, which is the lower carbon emitting nickel sulfide projects that range between 2 and 7 tons of CO2 per ton of nickel produced. So just a quick overview of Crawford and our infrastructure. We are located just outside of Timmins. For all that are not familiar with Timmins, it's a very old mining camp that has over hundreds of years of mining history, with the Hollinger mine being the center of the city. There's great infrastructure, roads, great power that's fueled by hydro and nuclear, and there's a rail line that runs right through the city, and you get access to not only the east and west part of Canada, but even the U.S. There's a 40,000 population there, so you don't have to fly in, fly out. You can just drive to site, and it's about 30 minutes away from central Timmins. So just an overview on our PEA. We have about a 1.2 billion NPV with a 16% IRR. At peak nickel production, we'll be doing about 42,000 tons of nickel per year. life of mine average will be about 34,000 tons. Cash cost will be about $1.09, and the all-in sustaining cost will be about $1.94. And what does that really mean on a cash cost production basis? At $1.09, we would be a first quartile cash cost producer, just right at the front of the curve. And you see some of the Russian-based assets that are in the negatives because of the significant PGM credits. And even on a carbon emissions basis, Crawford, at the mine site, excluding the carbon IPT process, we will generate about 2.8 tons of CO2 per ton of nickel produced, and that is on the industry first quartile as well. So as I highlighted earlier, at 3.5 million tons of M&I resources, Crawford is a top 5 nickel sulfide project. And we are still continuing to drill out the inferred, and there's still a bit of upside around the regional properties, but right now as it stands, we are a top 5 nickel sulfide ore body. And even on a production basis, at 42,000 tons of nickel per annum, we are a top 5 nickel production of sulfide material in the world, and we'd be producing as much as almost Sudbury does. We would also be the largest largest base metals mine in Canada. So a couple of things between now and our feasibility that's due in the middle of the year. We've seen a double of our resource expansion, so we're going to have double the material going through the mine plan, so it's going to have upside to our feasibility study results. Optimization and recoveries. When we first did our PEA, we only had limited testing. We had recoveries around 37%. We've done significantly more testing since, and we are seeing pretty good improvements there. As I mentioned earlier, the carbon net zero IPT process, we are going to generate substantial revenues from there, and we're going to have much of that into the feasibility study. As well, we'll have some cobalt and PGM credits that we didn't include in the PEA. So just on the flow sheet for the metallurgy, we actually are seeing improvements of up to 62% in some areas between just based on a combination of the material, the nickel ore types we've been blending in, as well as the reagents we've been using. But in general, we're going to see about a 4 to 5 percentage point increase between the PEA and the feasibility at this point. Roughly every 1% improvement to the recovery is around 94 million improvement to the or 92 million improvement to the NPV. And a key feature of our asset here is this IPT carbonization process that I kind of referred to. So essentially, when you look at when we pull rock out of the ground, we have ultramafic ore, and it has a natural sequestering property with it. So when we pull rock out of the ground, it comes out like this black material to the bottom right of your screen. And what happens is that over a course of a year, if we let it just sit there, it'll form a white magnesite over it. And what's happening is the rock is actually grabbing a CO2 molecule and just naturally absorbing it into the rock and sequestering it. It kind of locks it away. And it's a naturally occurring process that we've identified. And we're not the only asset out there that has this. There are a number of assets with it, but we just have a lot of the serpentine ultramafic rock. And if we let it just sit there passively, and if you look at the bottom left chart here, it follows this red curve where after 200 days, you'll get to carbon neutrality. But what we've done here is we've taken that black rock as part of the process, we've crushed it, and we've injected it with a concentrated level of CO2 before it gets deposited into the tailings. And from doing this process, we get to carbon neutrality after 36 hours, and after 6 days, we start generating credits for sale. So we believe that we can get anywhere between 750,000 tons, CO2 credits to 1 million tons of CO2 credits per year for sale. And just to put it in perspective, one of the largest Canadian projects out there for carbon storage is what Shell has, and they have about 1.3 million tons of CO2 storage. So we'd be one of the larger CO2 projects out there as well. So recently we made an acquisition of the Texmont mine that's around 30 minutes away from our Crawford property. It's just outside of Timmins, and it's a past producing mine that operated as recently as the 70s. It carries a grade of about 0.9 nickel, so it's a higher grade property, and we believe that it'll take roughly 12 months for us to reactivate the permits so we can get into production as early as 2025. And just very high level, we've been looking at this asset. We put about 20 holes in there so far, and we believe we should be targeting a resource and a PEA update by year end. And just highlighting some of the district scale potential of our property. So over the last 3 years, we've made about 18 acquisitions to consolidate an additional 13 targets. all in the Timmins area, and we've consolidated about 42 kilometers square of ultramafic highs, and that's about 50 times the scale of what Crawford is already. Each target has already had work done, and it has that same sequestering profile that Crawford also has. Actually, 11 of the properties right now already have a larger footprint than Crawford. And if you go to the next slide here, on the top right is our Reed property that just sits right outside of Crawford. As you can see, it has actually, like on the bottom right-hand scale here is our Crawford property on the Maganomaly. The Reed property is actually already larger than Crawford. And mind you, Crawford is about 1.5 kilometers of strike that carries that 3 to 3 million tons of M&I resources. So essentially, we just started drilling Reed, and kind of the angle here is that we believe we have multiple pods of these 30 to 40 year mine life deposits that Crawford also carries. Just here is on the M&A activity that we've been seeing in the last little bit. BHP has been very active, as you've seen, and Wyloo has also been pretty active. But the takeaway here is that any nickel sulfide deposit that's been known for over 10 years has been acquired. And more recently, when BHP made the bid for Oz Minerals, they reacquired West Musgrave that Oz Minerals purchased for $280 million just a few years back. And the implied value that BHP now paid for West Musgrave was about $2.2 billion. So almost 10 times the value that Oz Minerals bought it for just 3 years ago. So a couple of things to highlight for 2023. We already announced our strategic investor with Anglo American. We are going to appoint our debt advisors for our big project raise in 2026-27. And we've going to have our feasibility study announced in the middle of the year. Hopefully, we're going to get some offtake agreements signed but before the year end. And with the Anglo announcement, hopefully that gives our off-takers some comfortability that this project will advance. And Texmont PEA and resource, we're going to see that by year end, and we'll also see some First Nations permitting updates as well as regional exploration. And thank you very much.